The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Well, hello and welcome to The Trade on this Thursday. Pleasure to have you with us. Let's just take a look at some of the headlines traders are watching today. And we have, of course, Bessent, the U.S. Treasury Secretary, saying that Chinese tariffs are not sustainable. So backing away from some of the extreme tariff talk of just a few days ago. Stocks have climbed, the U.S. dollar as well, while the gold and its incredible safe haven status is looking a little less glossy, at least today. Now, Donald Trump, the U.S. president, also saying that he may look to exempt car makers from some UF tariffs, at least according to a report in the FT. In the commodity space, OPEC Plus says that it will consider another accelerated oil output increase for June. Interesting, while we continue to see pressure being put on the price of oil. And the Prime Minister, Anthony Albanese, is pledging to set up a critical minerals strategic reserve. Of course, the election just a couple weekends away, maybe a week and a half. All right, let's get to some of the technicals and the charts to go along with it. Nick Twidale from ATFX is joining me now. Nick, hi.
Hello.
I've been looking forward to this chat because it has been an extraordinary time, particularly in FX markets.
You've put me on notice there. Yeah, it's been huge, hasn't it? The moves that we've seen, I'm still shocked every day when I'm looking at charts and I kind of look at the move and you expect 60 or 70 points and it's like 250 and it's percentages per day. So it feels like we use the word pivotal too much, but it does feel like we're at a bit of a pivotal stage for the dollar now that we've got this turnaround from President Trump and associated cronies and everything that's going on there. So it's massively interesting times for currencies.
Okay, so let's start with the Aussie because got as low as 59 roundabout there. And then this week, wow.
It did. So it's a little bit difficult to write about as well because I think I put a note out the other week and said, well, we got down to 59 on tariff concerns and then we rose back up to 64 on tariff concerns. So it's very difficult to play currencies at the moment. And when we look at these charts, they're kind of, they're massive moves that we're not used to. We're used to seeing like 30 points a session and we're seeing that in a matter of minutes. So it's great times, but the fundamentals have kind of been thrown out with the baby in the bathwater, right? So we've got to trade what we're seeing from the States and that's really dominating all the majors. And the issue we've got now is how much tariff pain is priced into currency moves and then how much could be unwound with what we're seeing from President Trump and from Bessent and everyone else over there at the moment. And what does it mean for various individual currencies? And personally, I think we're going to start to see some really good trade options on the crosses because we're going to see different pace of deals done and it's going to be more advantageous for certain jurisdictions than for others. Like if you spoke to me a couple of days ago, I'm like, China, you just want to be selling it, and now suddenly things look a lot more rosy, but we kind of want a number from someone so we can go, okay, how much have we priced in? Where do we come back to? Yeah. And the Aussie gets caught up in all of that, of course.
It sure does, particularly because of, you don't need me to tell you, but our exposure to China. So where would you think the Aussie would be heading in the short to medium term?
I think overall, and I've kind of been wrong for the last few big figures, that the Aussie is going to be under pressure because tariffs are not good. Whichever level that we get to, they're not good for global growth. And Aussie, as we know, we're closely linked with China, we're closely linked with the US. I feel we're going to be under some pressure. So I felt when we were under 60 cents, that was the right move. And so this small 5 big figure recovery is a little bit puzzling, and fortunately it's not just me, it's to other people I talk to in the market. I think we topped out nicely from a technical perspective on that 200-day moving average on the dailies, and I think that might do us for now, but it's very difficult to put a call. We're in the middle of ranges. It's a really, you've got to trade what you see. But I think now, because we've seen this move back to the top side, the other reassuring thing I think for a lot of currency traders is that we've got President Trump pulling back on his attack on the Fed. And I think that could have done a hell of a lot of damage to the dollar. I think it already had done. So how much we can price in that in the market is going to be important over the next few days and even the next few sessions. So the Aussie could suffer if we see dollar buying, because we've still got a fairly resolute Federal Reserve Bank that are saying, look, we want to see what's going on. We're worried about inflation still. Rate cuts aren't going to be coming at as fast a pace as certainly President Trump would want to see, and other investors in the market. So,
oh boy, where can we? I mean, the Canadian dollar, the CAD, is at a 6-day high, I think. Again, on hopes of lower tariffs, and we've got Trump talking, as we just said, about auto exemptions, which is big for Canada.
It is, yeah. So I think CAD's another one which, initially months ago when the CAD suffered horrendously, and now it's kind of back in favour, and trying to trade CAD and CAD crosses has been a real difficult thing over the last few months.
What about cable? We heard from the BOE. They obviously are, Bailey saying that, I don't know where the state of tariff negotiations are. I don't know if anybody really knows where the state of tariff negotiations are there.
I think that's the problem, and it's us talking, and then you've got central bankers that are also, who you would like to think have got a little bit more of a clue. I don't think they really know. I don't think anyone does. So you hear from Andrew Bailey, and they're in a rock and a hard place. They all are, and as is Jerome Powell, as everyone else. It's like, okay, still a bit of sticky inflation, wages are still a bit of a problem over there. You've got interesting political situation as well. Everyone wants clarity, and I think we've still not got clarity to submit. To me, that's kind of downside. Now, does the cable suffer? We've had a massive move up over the last few months, right? Same as in euro. We've hit decent levels. It's very difficult. Like the technical's been blown out the water. So here you've just got to trade what you see, I think. So I'm happy to fade moves. I think we're going to see some dollar strength across the board. So for cable, I'd kind of be looking to, and by no means put in a massive portfolio on it, but to fade these moves with stops above those recent levels. And then if they break higher again, then you reevaluate. And there's a lot of reevaluation going on at the moment.
So classic, let the price action dictate what you're doing.
I think you have to at the moment. I think the guys on the desk are sitting there and they're kind of making their money on moves that they're seeing as it happens, because when you have these huge moves in the market and they're percentage moves like we're talking about, liquidity does thin. So if you start to see flow going through the market, if you start to see bids getting hit, you can jump on the back of that. And then, in the old days, back to my old, there was 5 to 10 points in that. There's probably 30 or 40 points in it. And that's where guys on the desk are seeing moves. But the rest of us, when we're sitting back without the transparency that you get from a dealing room environment, we then have to look at charts, and you've got to be very patient and wait for your levels, know what your portfolio needs to do, and then execute when you get to them.
What's happening with euro? Because we do have ECB's Christine Lagarde warning that this tariff situation, how it unfolds, could even be disinflationary in Europe.
Yes, and that's another interesting take, because all we've heard is tariffs and inflation, and now it's like, okay, well, I think everyone's starting to look further down the curve than we did initially. And, to me, I thought we had another 6 to 9 months from the dollar perspective and maybe from the euro perspective that things would start to turn down, but markets are pricing in that now. So she's one of the first cabs off the rank that's sort of talking disinflationary, so that could put some pressure on euro, and also, maybe there's a reason why she said it. So I think, once again, it goes in line with, I've got a feeling we might see some dollar strength. So you'd fade this move in the euro, but I looked at this morning, and then this is the longer term chart, and I'm like, okay, it doesn't look like it's too far off the highs, but there's 150 points where you've got to put your stop above. And I think you do that, you've obviously got to change your position size accordingly if you're a speculative trader. They're fascinating times, but I think we could see euro drop back at least to that 110 level, and then we've got the 200-day moving average. I think that's, even with glasses on, it's 107 sort of 50-ish.
51, I think.
I think we could see a retrace to those levels, but equally, the way the market's moving at the moment, we could be at 120 in a couple of days.
Yep. So you're saying US dollar strength. That's your overarching sort of take.
I feel we see a recovery in it.
Yeah. Okay. So recovery. So dollar yen. What happens there?
Dollar yen. I think we've got a bit more topside to come, because I think the risk on trade, the haven trade, was put on yen and Swiss, to be honest. And I think we see an unwinding of that haven trade, and once again we're seeing big figures, percentages in hours, and dollar yen could really accelerate back up. And I think there's a 148 level, which is where that trend line resistance is coming in, and the 200-day moving average on that daily is at 150. So that feels to me kind of a bit fairer, but I'm talking 700 points. It's crazy.
Well, it makes you earn your big bucks, I think. All right, thanks so much, Nick, for joining us. Always appreciate your insights. Yeah, all those guys on the dealing, guys and gals, I should say, on the dealing desks, I guess, getting schooled in this environment. All right, that does it for this episode of The Trade. We'll be back next week.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.